You're listening to The Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of The Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And speaking of which, we've got a really cool interview today with Becky Reed, and she'll be talking about a proposed new credit union that she's in the process of going through the chartering process for, focused on the DeFi space, decentralized finance. And the credit union is probably not what you immediately might think that would look like, given that field of membership. So we'll be talking about that just a little bit more in just a minute. I want to remind you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. You can also track us down twice a month on Wednesdays these days at the Credit Union Digital Town Hall, which is a great live opportunity to share best practices around the things with that are really at the top of mind for credit union leaders. We've been getting some great response and some growing audiences for those as well. The next one's coming up on Wednesday, February 14th. You can spend 3 p.m. Eastern, noon Pacific with your Valentines at the Best Innovation Group, and a small cadre of 40 or 50 or so of your credit union like-minded people. If you're interested in joining, I'd encourage you to drop a note. Check out the website, cutownhall.com. It is free for everybody to join, but you do need to register in advance. And I have not mentioned that we've been doing some pretty cool tech giveaways, and I believe that'll be the case again on the 14th. So encourage you to check that one out. Other news that came up this week, WorldPay is again a standalone private company. They, in their press release, they refer to it as an independent company. But as you may recall, there were 3 very significant payments mergers that took place back in the 2018 or so timeframe. The first one of which was Fiserv with First Data combining. FIS followed suit by acquiring WorldPay soon after that, and they have now unwound that acquisition. It will still be 45% owned by FIS, but it will be a separate company. The other 55% will be owned by a private equity firm, GTCR. And they've brought back WorldPay's former CFO, Charles Drucker, to run that. For whatever reason, that's of the 3 big recent, still being in the last 5 years, big events as far as combinations in the payment space. This is the one that, for whatever reason, did not fare as well, and it'll be interesting to see what happens. You may remember the last time there was a big payments player that got taken private. It was First Data, and that one wound up, I think, lasting a lot longer in private hands than anybody would have expected when that first went down back in around 2007. Now, there's some extenuating circumstances because that deal was struck by KKR just before the market totally imploded with the Great Recession of 2008. So I'm not drawing any conclusions there. I will draw conclusions, however, that when something like this goes into private equity hands, I think we can kind of make a pretty good assumption on what's going to happen on the expense side of things. So it'll be interesting to watch that one. Again, just mentioning Fiserv and First Data eventually joined hands. That's how First Data wound up with or I guess KKR, you'd say, made their exit, as you would call it, rather than going public again with the company. And the First Data piece of Fiserv is now, if you're not familiar, is pretty much branded out to the marketplace. The First Data name, for the most part, has gone away. And the merchant side of that business is being branded these days as Carat, as in 14 karat, 21 karat, whatever, CARAT. The third of those 3 major combinations came a little bit later than those, but I think still definitely fell into the rule of threes. Global Payments acquiring TSYS. And if you look, the Fiserv and the Global Payments stocks have performed pretty similarly and quite well since then. I do find it interesting that TSYS continues to seems to be a standalone brand still. Notice that they still had their own entire presence in terms of trade show floor booths and things like that. I'm not exactly sure what's behind that. I would have thought that those two would integrate a bit more. Global Payments, at least here in my market here in Atlanta, has actually become a little bit more forward in terms of marketing directly to the end user too. But to me, that struck me as one of the interesting stories this week. Another one that's not exactly as current, but something that's kind of been top of mind for me. I forget if I've mentioned this before, but I've been teaching this semester a course. It's a graduate level course on the foundations of fintech at Mercer University. It's the second year I've done this, and it's a group of students, a small class, very discussion oriented, graduate level. And both semesters I've kind of started off with a questionnaire with kind of what people knew about fintech, some of their kind of personal behaviors, obviously not a scientific study, but asking who holds a credit card, who has a debit card, what they use most often, and how often, and if they carry cash typically. The first year, I got a fairly low number of people who said they carried cash. And again, this is the population, 25, 35 years old, that you typically would think are the folks who were kind of not, by stereotype at least, less likely to be carrying cash with them these days. This year, the majority of them told me that they still do carry cash. And I was a little bit surprised by that. I was more surprised by what I heard right after that, because I asked the question of why they still carried cash. Several people chimed in and said one of the main reasons they still carry cash is that they can give it to people on the street who are less fortunate than them, which I found that was not, if I were thinking about reasons people would actively choose to keep cash on hand, that was not high on my list, and it was certainly kind of heartwarming, for lack of a better way of putting it. I was very impressed to hear that was one of the reasons that people thought about it. And it's one of those blind spots that we don't think about in terms of cash, which brings me back to the Diary of Consumer Payment Choice, which is a great asset that the Federal Reserve makes freely available. And we'll post a link to some of the studies on that. Again, it's one of these things that we really get a skewed perspective by looking at a fairly small demographic as we look at payments professionals who tend to be fairly well paid, let's be honest. And, we seem to think cash is going away, both because we know about other solutions, we're interested in trying other solutions, and we are in a privileged position of actually having all the bank access that we need. When you actually look at the diary, that's a demographically representative sample of a cross section of the U.S. According to the study, 83% of Americans still use cash at some point in any given month. That is the highest incidence of any type of instrument usage, higher than debit card, higher than credit card, which I bet most people would not think was the case. Just an aside on that one, even checks today are still almost half of individuals. And that half, by the way, would even include people who don't have bank accounts. So if you look at people who have access to them, it's definitely over half. 46% of people write a check at some point over the course of a month. Again, probably not what people would have guessed. And had another conversation with somebody that made an interesting point that, again, I hadn't really thought of. When folks who travel for conferences and things like that brag about the fact that, hey, I never carry cash anymore. Somebody said, wait a second, what about leaving tips at the hotel? Does that mean that you've totally gotten out of the cycle of actually, leaving a few dollars for the housekeeping staff and things like that? It's one of those, and again, it points to one of two things. Either we're living in a privileged position that we're not actually taking into account people who still need cash, or we really are using cash and we just kind of forget about those little events that just kind of happen as course of everyday business. Anyway, I posted a link to that study. I think you might find it interesting. Let's get on to our main event. Becky Reed. One of the things Becky talks about here is the fact that there have not been a lot of de novo credit union, new startups recently. And she's aiming to change that with the DeFi credit union, the proposed federal credit union. Let's be very clear on that language, as she points out. But anyway, let's just get into it and let's hear what Becky has to say about that and a bunch of other things about DeFi and DeFi. I'm here with Becky Reed, our friend of the podcast. Becky, you've been on before, and you're a woman who wears a lot of hats. I'm not even really sure how to introduce you. I just learned this morning that you're an author now as well. The last time we spoke, you were the CEO of Lone Star Credit Union and also working with a startup company called Bank Social. And even that's changed a little bit since then. So first off, thanks for talking, and kind of tell us what you're up to, please.
Thank you, Glenn. I'm excited to be back.
So there's a book and there's also a de novo credit union in the mix. Can you say a little bit about both?
Oh my gosh, I think I don't ever sleep, Glenn. Yes. So I have a book called Credit Unions and DeFi, A Financial Renaissance. And it really is kind of my perspective on how I feel credit unions can win in this new world and how we should embrace the decentralized finance community because the ethos of both communities are very closely aligned. So you can read the book to find out more. And the proposed Defy Federal Credit Union is part of that journey. So
I was going to
yes,
say,
happy
I
to
mean, I
talk
think
about all that.
the book probably kind of lays out your overall, as you say, your ethos, the kind of, I think kind of underlies a lot of what you're doing. And you've just answered one question right there. You pronounce it defy and not DeFi. I know it's spelled DEFY.
Yes.
And
So the interesting thing is it is a play on words,
yeah,
right? So you have the DeFi community, which is DEFI, and then you have Defy, which kind of signifies defiance
yeah.
and or defying an obstacle or defying gravity or whatever the case may be. And so it is a little bit of a play on words, but yes, it's pronounced Defy.
And it's interesting to me because, given, and this is something that John Best has talked about quite a bit, is, the hot topic of the day is artificial intelligence. The two are not totally unrelated, but, he's really encouraging credit unions, don't forget about these other really good ideas, even if they might have fallen out of the headlines right now, between blockchain, cryptocurrency, Web3, decentralized finance. Um, you're swimming upstream a little bit, I'd say, at least relative to where we were with regard to mentality around blockchain maybe 18 months ago. Can you talk a little bit about the journey? You've got the de novos in process. Where exactly does DeFi stand right now?
So the proposed DeFi Federal Credit Union is in phase 2 of the chartering process. So there are actually 3 phases of the federal chartering process with NCUA. And phase 2 is the bulk of the work. So that's when you have to basically present your business plan, your pro forma. You have to have all of your policies in place. You have to have your marketing plan in place. You have to know who your board's going to be, who your management staff's going to be. You have to have your bylaws, your recommended bylaws prepared. So it's really the biggest part of the chartering process. So that's where we are now. The whole process can take 6 to 9 months. So we're at the tail end of that right now.
Yeah, obviously, from what you said, you've passed one milepost at least, finishing phase 1. What does phase 1 involve?
Phase 1 is field of membership.
Okay, and you've gotten kind of approval on the way you've laid that out, and exactly how did you define the field of membership?
So the field of membership is associational. And the association is Block Advocates, which is a 501c3 organization that focuses on education around Web3 initiatives, primarily focused on financial institution regulators, boards, staff, as well as just the general public. So Block Advocates has partnered with several of the state blockchain associations. Texas is the first. So the Texas Blockchain Association utilizes the education provided by Block Advocates to educate people in general around Web3 and blockchain initiatives. So that's the field of membership. If you are a member of Block Advocates, you can be a member of DeFi.
And I did see on your website the Texas Blockchain Associates logo. So if you're a member
Mhm.
of that organization, you're eligible as well, I take it?
Yes, yeah. So you can be a member of Texas Blockchain Council, and they will actually provide a portion of your membership dues to Block Advocates. So then that would make you eligible to join the credit union once it starts up.
Thinking back to the last time we talked, and again, like I say, wearing multiple hats and you're still affiliated with Bank Social as well, correct?
Yes, I'm the
Yeah,
chief operating
I
officer.
thought so. Now, one of the things we talked about, this was, going back several months, you were a big proponent of the not your keys, not your crypto kind of philosophy around the way custody worked on cryptocurrency. And I'd say the events of the last year kind of really supported your approach there. Can you maybe remind people a little bit about how that all played out?
Yeah, absolutely. It's one of those things that is kind of a central core tenet of the decentralized finance movement, and that is your keys, your crypto, meaning that you should own your digital assets just like you should own your money. It's very interesting that of all of the rights we are given as human beings, and especially here in the United States, right? We have a Bill of Rights that is laid out, and there are certain things that are protected in our Constitution around what we have access to and the rights to hold and own, but money is not one of those. And so when Bitcoin was created, it was really an effort to allow people to be able to own and move and do what they want with their money without a financial intermediary like a credit union or a bank. And so, because of that particular ethos and why Bitcoin was created originally, that thread has moved throughout the movement, which is very similar to the credit union movement that is more than a century old at this point. But that whole process of owning your keys is a central tenet to what we do. And yes, I've always believed that. That model, however, wasn't what initially has come about in digital asset exchanges, for example. Digital asset exchanges have gained popularity over the last several years. They are all custodial exchanges, meaning the digital asset exchange owns your crypto and they're just giving you an IOU. Unfortunately,
Would you compare that? I'm just trying to think the way I just suddenly kind of came to mind. If you're thinking about stocks and owning a portfolio
yeah,
of stocks, would that be a
yes.
little bit like keeping in street name as opposed to actually having the certificates in your own
Absolutely.
possession?
So yes, so now when you think about stock, and this of course is why the SEC has gotten so heavily involved in I don't want to say they're regulating because they're not really regulators, but they're fining, right? These companies and the crypto exchanges, some of which have failed. Of course, FTX is probably the most famous failure of all. That was a custodial digital asset exchange. But
And
yes,
wound up with people's assets kind of
oh
stuck in limbo.
yeah. Well, so let's talk about stock for a minute. So when you purchase stock, and let's think about why we had to do this in an analog world, right? Of course, digital currency is a completely digital world, so things happen a little bit differently there. But let's talk about stock just as a comparison from a custodial perspective. So when you buy a stock, you can hold your stock certificate with a custodian, which by regulation today has to be a financial institution. Okay. That's a regulated entity and the only ones that are allowed to
Yep.
custody your stock certificate. And there are some pretty stringent rules around customer protection so that that particular financial institution that is holding your stock certificate cannot commingle the funds, right? They can't use that stock for themselves. They have to hold it specifically for you. And there are all kinds of regulations and rules and examinations and audits around that practice. So, or you can hold the stock certificate in your safe at home, right? So that would be a self-custody scenario in a
Mhm.
stock situation. So what has happened is these digital asset exchanges have taken the approach that they should be the custodian of your stock certificate. Now, the way that it works today with a stock certificate, where only a bank can hold that certificate, the bank can't issue the stock. It can only hold the stock on your behalf. With the digital asset exchanges that are most popular today, the the digital asset exchange that sells you the cryptocurrency is actually the one who's holding the certificate. So they're selling it to you and they're holding it and they are potentially leveraging it in the back end, which was the case of FTX, unfortunately. So that's why I believe that self custody is the future and that because there's certainly a place for custody, But I think just in a regular digital asset exchange, you should own your own crypto.
Yeah, what I'm hearing is the model that the FTXs of the world had gone with was very similar to a heavily regulated securities industry without the regulation.
Exactly. And without the separation.
Right, right. So Defy, the credit union, I'm curious, I'm sure inevitably everybody loves to come up with little shorthand names, and you're going to be thought of, I think, as the crypto credit union. And
I
I don't,
know.
would you push back against that? How would you distinguish what the vision of Defy Credit Union is relative, and it's federal credit union, right? You're applying for a federal charter, I believe.
Yeah,
How,
so right, and the you have to, NCUA is very particular. We have to say proposed DeFi Federal Credit Union
thank
because
you.
it is
Yes,
still in the proposed process.
right.
Yes, so thank you for that. But yes, I would push back on the quote unquote crypto credit union. And yes, and of course it's an alliteration, so it's easy to say. So people call it that, but the credit union itself is a traditional credit union in every sense of the word, right? It holds deposits. It has members. It looks just like a regular credit union. Now it'll be on the smaller side of the asset size. It's always going to be small. And the proposed Defy Federal Credit Union, think about it as going back to our roots. So when credit unions really started gaining traction in the early 1900s and up into the mid century, the mid 21st century or 20th century, I guess it was. Um, so in the 1950s, 1960s, it was pretty commonplace that your credit union was managed out of a shoebox.
Yeah.
Right. So, it was, manual ledgers and manual membership cards, and you probably went to your employer's HR department in order to make your deposit. And so think of it like that is the proposed DeFi Federal Credit Union is really going back to our roots with small, low overhead organizations that are run by volunteers that are really just there to help the members achieve what their particular niche expectation is. So I believe that the future of credit unions, and I'm not saying that all credit unions should be this way, but an industry without new entrants is a dying industry. And unfortunately for credit unions, not a lot of new credit unions get chartered every single year.
No, definitely, definitely
But
not.
a lot of them get merged, and credit unions as an asset category, individual credit unions tend to get bigger. And I think that from a new entrant perspective, the smaller and niche focused credit unions like the proposed DeFi Federal Credit Union is really where you're going to start to see traction because there are new digital communities. And that's really what we are focusing on at the proposed DeFi Federal Credit Union is a digital community of people who have come together with a common bond, something that they have in common, and that is they want access to a Web3 environment using digital tools through a federally regulated, trusted financial institution that they can own.
So a
And
couple
so,
couple things I'm hearing that I think are interesting. One is, there's kind of the stereotype about the DeFi and the crypto world is they just bristle at the whole notion of regulation. So pretty much by definition, somebody who chooses to join this credit union is saying, no, we want to be regulated because we're engaging with a regulated entity. Is that fair?
yes, well, yes. And I think that unfortunately, yes, the DeFi community, and there's certainly a faction of folks that completely reject the notion of any regulation and 100% anonymity. And that's okay for people who feel that way. This is not for them. But in order to really gain traction in real world business case scenarios, you're going to have to follow consumer protection financial regulations globally. And so what you see where people are taking advantage of a quote unquote unregulated situation or saying those regulations don't apply to me because of some loophole that they particularly find convenient to point to. The truth of the matter is that people in general are going to want to deal with organizations that make sure that they're protected, make sure that their rights are recognized, and so that means regulation.
Yeah.
And frankly, most of the regulations that are around today, the consumer protection regulations, apply to this new digital environment in
Yeah.
Web3. They really do. And so we've taken the approach that we're going to apply them and assume they're applicable as opposed to the opposite.
And that's a pretty interesting distinguishing trait right there. Now, am I thinking about this correctly? If I'm hearing it, again, and I wasn't saying that I believe it's the crypto credit union, but in terms of the way that DeFi really applies, in terms of where it's the field of membership that is really more than the services you're going to offer. I mean, maybe distinguish that for me a little bit. You mentioned that there
Sure.
will be some Web3 capabilities here, but for the
Mhm.
most part, it's the field of membership coming to you is the piece that really makes it, for the DeFi community.
Right. What's really interesting to me is that credit unions originally started and have continued to provide services to folks that are underserved,
Mhm.
people who don't have access to fair and equitable financial services. That has been that way since the beginning. That's why credit unions were founded, and that's what we do very well today. And there is a community of people, and it's the Web3 community, whether you talk about businesses who choose to serve the Web3 community, whether you talk about consumers, these folks are being left out of the traditional financial institution space because the banking regulators here in the United States have chosen to take an approach of Mother May I, as opposed to allowing the financial institution, like NCUA has done, to make the best decision, follow the due diligence, and do what's best to serve your membership. And so what has happened is banks have said, you know what, similar to cannabis, similar to money service businesses, some financial institutions in the banking space have said, we don't want to take the risk. We don't want to have to ask for permission from the FDIC and the OCC in order to serve these companies. So therefore, we're not going to serve them. So in the DeFi space, what's pretty interesting is there are so many stories of, you know, publicly traded companies, Bitcoin mining, for example. They've probably been around the longest and are really the most traditional. They're getting kicked out of
Mhm.
financial institutions. They're being told, We don't want your business." Individuals, there are many stories of individuals who have decided to buy, large amounts of cryptocurrency, and you have to send a wire generally in order to do that. And the banks have said, "You're buying cryptocurrency. We don't want you as a customer." And so they're being kicked out of the traditional financial institution space, and they're having a difficult time now finding fair and equitable financial services. So that's what the proposed DeFi Federal Credit Union is all about. Now, we're not a crypto credit union in the sense that we are not holding digital assets. The credit union is a credit union just like any other, holding fiat. No digital assets. They're not trading digital assets. They're not creating digital assets. Nothing to do with digital assets other than providing their members with a digital wallet, digital banking, so to speak, that provides them access to do things in the Web3 space.
And I assume that wallet could be the place where they hold their keys.
Exactly.
That's the whole, not your keys, not your crypto. You're enabling them to hold them, but you're not holding it for them. Which,
Nope. The credit union is not holding any digital assets. They're not holding anybody's keys. It's all self custody, which is that whole verbiage of bank yourself,
I was about to
right?
say, you've got the phrase "bank yourself" and "finance without fences" are kind of your two kind of calls to action I see out there, or rallying cries,
Yep.
I guess.
Yep. Bank yourself refers to not your keys, not your crypto. So it's your money, it's your decision. We provide the tools to give you access to do things in the digitally enabled Web3 space. But at the end of the day, it's your money and your decision.
And I have to say, I think you're being polite earlier when you say that some traditional financial institutions are not comfortable. I would say Probably the vast majority, but I said it, not you. I'm guessing you may want to keep it that way. This is fascinating, and I understand this a lot better now too. So, as you say, the process, was it the phase 2 process of the
Hmm.
three-part process of
Hmm.
NCUA chartering takes usually 6 to 9 months?
It does. That's correct.
Okay, so we got a little bit of time before we're actually
We
going to
do.
score, but you do have a website up there for people to learn more.
We
You've
do.
got a fair, I mean, you mentioned already the Texas Blockchain Council, but I see a list of partners there at the bottom of the page.
Hmm.
Hedera's there. Is Ripple there? Am I
Yeah.
thinking correctly? And is there a bank social connection as well? How do you work with those? You mentioned the Texas Blockchain Council. What's the partnership relationship with some of the other logos we see on the screen?
Sure. So Bank Social is providing the software. So think of it as a core provider
Got it.
that provides the underlying infrastructure that the credit union will use in which to service its members.
Mhm.
So that's the relationship with Bank Social. Hedera really believes very strongly. They have a completely different business model for a blockchain or a distributed ledger. They are governed by a council, which is a different structure than Ethereum or Bitcoin blockchain. And they also believe that the ethos of DeFi and credit unions is very similar. And so there will be representation on the proposed DeFi Federal Credit Union board from
Ah,
Hedera.
okay. Interesting. This is, yeah, fascinating stuff. Now the website again, I didn't jot it down. What is the URL for people to take a look?
It's DeFi, that's DEFY.coop.
Wonderful. And I will also post a link to your book, Credit Unions and DeFi, A Financial Renaissance. And I think we'd be remiss if we didn't mention Bank Social, where I'm guessing you still spend the majority of your time, or is it pretty well carved up these days?
No, I spend the majority of my time here at Bank Social. Thank you, Glenn.
And that's banksocial.io, correct?
That's correct. Yes, sir.
Wonderful. So yeah, we'll put all those links out there, and I will certainly be watching to see how this progresses because I think it will be fascinating.
Thank you, Glenn.
Becky Reed from all of those organizations we just mentioned, but for the purposes of this call, I'll get it right this time, the proposed Defy Federal Credit Union. Thanks for taking the time.
Thank you, Glenn.
And just by the way, I misspoke in there. I took a look after the fact. Ripple is not on the website. They are not a partner that's been announced. I have no idea if they've been talking to them or not, but they just, for the record, they are not on the website at Defy. But there are, other companies that are very interested in this space. Hedera, very interested and involved. Swirlds, which is another one we've spoken to in the past, also a partner out there. So I find this whole thing fascinating. We'll be following along. Another thing that Becky confirmed for me after the fact or clarified is, what is her role at Defy? Given that she is the chief operating officer at Bank Social as well, and she says that she is positioned to be the, as she put it, direct quote, volunteer manager of Defy Credit Union. So this, again, as we talk about going back to the roots of credit unions, sounds to me like an unpaid position, which is pretty interesting to be putting this much effort. Obviously a labor of love. Something tells me it's not going to be running out of a shoebox the way that she described some of the old credit unions of the 1960s and 70s. I think I'd be curious if there are literally any shoebox credit unions left. That would be, and actually, that just ties us into another topic. GAC, the Government Affairs Conference for the combined entity now that's America's Credit Unions, CUNA and NAFCU, the National Association of Federal Charter Credit Unions, taking place March 3rd through 6th. I intend to get there right for the beginning. There is the Small Credit Union Roundtable that takes place on Sunday afternoon. Maybe I'll find a shoebox credit union or two. Who knows? I'll be curious to see what's going on there. If you happen to be attending GAC this year, please reach out, get in touch. Love to say hi to you. John Best and I will be speaking. There's a CEO Council. It's for CEOs only breakout session on Tuesday. So we'll be doing that. I'll also be speaking on open banking, I believe, also on Tuesday, if I'm not mistaken. And so with those a couple of topics, there's a lot of really good stuff, as always, coming up, both at the GAC overall and at the council level, who are a sponsor here of the Big Cast. And, of course, we always appreciate their help. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvati. You can find me at 154 Advisors, which is my own firm. You can also find me at the Best Innovation Group website, big-fintech.com. If you go to the media tab, you'll find an archive of past episodes of the Big Cast. Wherever you're listening to this podcast, Spotify, Apple Music, etc., you should also be able to find our show notes, which are also out there on the website, with links to some of the things that we've spoken about that you may want to follow up on. That Federal Reserve study, the DeFi credit union, and Becky's new book as well. All stuff that I think you'll find interesting. You can find out more about the Best Innovation Group, again, at the website. Lots of other places where you can find out about things like artificial intelligence offerings, the voice response, the 5 product, and other things, as well as the Innovation Club. So check that out. You can find the Best Innovation Group on LinkedIn. You can find them on X at Big FinTech, or you can find our Grand Poobah John Best at JB FinTech. I'm on X at 154 Advisors. You'll find me on LinkedIn as well. You'll find us speaking again here on the Big Cast next Tuesday and pretty much every Tuesday as we share the latest with you on these conversations that we love to have and hope that you are finding engaging and will engage in as well. Until then, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.